Hi, my name is Wesley Manambo, a research analyst at Genghis Capital, and here's why you should invest in stocks. First, stocks give you the potential of unlocking returns, and these are realized through capital gains or dividends. You might ask, what are capital gains? Basically, in simple terms, capital gains are returns that you lock in when you buy at a lower price and sell at a relatively higher price. And those margin per share, let's say you bought at 15 shillings and you sold at 20 shillings, you made 5 shillings per share. Then multiply that by the number of shares you sold, that will be your capital gain returns. Second will be through dividends. Dividends basically are when a company shares a portion of its earning either through its day-to-day operations or through selling of a business unit in its balance sheet, and when they get these monies in their P&L and they see it's more beyond what we want to hold in our reserves, or based on their policy, they give a portion of it. Let's say they made 15 shillings per share in that period and they held back 3 shillings per share. It means they'll release to your shareholder as 12 shillings per share. Then multiply that by the number of shares you'll be holding. I think that's a good way of locking in good returns. The roles of stockbrokers are: first, they'll help you in opening a CDS account, which is the share trading account. For instance, if you visit us at Genghis Capital through the Jekuze app, we'll help you do this. Second, now that you already have the account, the stockbroker helps you in executing your buy and sell orders, in buying the stocks of your picks and selling them at your opportune time. Third, they'll help you manage your portfolio by monitoring it against market movement. And most importantly, in my view, which is the fourth reason, to remove the guesswork out of investing, they'll do the specific market research and analysis and present you with picks and strong reason and drivers as why to buy or sell at specific market timings. You may ask, how can I pick the good stocks, the cream de la cream? First and foremost, you need to care to know what the company does. There is a famous quote in the market that says, behind every stock, there's a company. You need to know what they do. In essence, what this simply means is care to know the market, the goods they sell, their target audience, how are they performing, how they've been performing in the past times, what's their outlook like, their management strategy, and also the kind of team that they have. Is it well equipped to really bring in better returns in the future? This is key. Second, you need to look at this company against its peers in the market. Let's say you're looking at a telco company, for instance, Safaricom. You'll want to see other telco companies in the same industry, how are they performing, and valuing it based on these same companies. Is it stronger? Is it a stronger peak? Is it a lower peak? It will help remove the guesswork out of this investing and narrow down your investment picks to just the select few that you need. Third, which I think is the most important of all, is conducting some valuation of some sort. Trying to find out, in essence, how worthy is this company? Is it overvalued or undervalued? Overvalued means the company is currently trading above its estimated value. Undervalued means the company is trading below its estimated value. And for an investor, you should always be keen on the undervalued stocks, because that's how you'll unlock what we previously called the capital gains. And remember, one of the roles of your stockbroker is to make investing easy for you, so you don't have to worry about all this valuation and metrics, whatnot, what forth. So you can simply contact them and they'll give you the stock picks that are good in the market at the current moment. If you're considering to start your investment journey, here are my 5 golden rules. First, you should focus on trading well and not to speculate. Second, fiercely protect your capital. Third, the only thing worse than being wrong is staying wrong. Fourth, remember, you should act immediately without hesitation on qualified steps. And fifth, and in my view most importantly, if you're confused, remember rule number 2, which was fiercely protect your capital. The second reason why you should invest in stocks is because stocks are a good source of passive income. This is solely because they pay dividends, and based on the dividend policy, the stocks that pay dividends, maybe inside half of the financial year, they issue you what we call interim dividend, or at the end of the financial year, what we call final dividends. So when you consider that, that's a good source of passive income. Third will be stocks give you a sense of prestige. I mean, let's say you hold a share in Safaricom and Safaricom does something really good with regards to social benefits, you will feel part of the bigger goal. And the other reason why you should consider stocks is for speculation. Basically, with the previous example that we gave of stocks volatility, prices at 15, next at 20 shillings, you'll find there's this investor who thinks that the company's earnings this year will be better than last year. So what they do, they buy the stock prior to the release of the results. And when the results come out, if they're correct, the price will appreciate and they lock in the margins. Also, the opposite is true. If they believe the earnings will be not so attractive as compared to previous earnings cycles, they'll sell the stock, then buy it at a relatively lower price. In your investment journey, focus on quality stocks, investment that is skewed towards the long term, and seek advice from a trusted brokerage firm. Happy investing.